Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. US stock markets finished a challenging week with a relief rally on Friday, bolstered by a trio of positive developments. Sentiment started to improve during the Asian time zone on Friday after Senate Minority Leader Chuck Schumer indicated he would support a Republican funding bill easing government shutdown worries. Additional optimism came from a Chinese announcement about consumption boosting measures, followed by German political parties agreeing to a fiscal deal which will boost defense spending and also growth. US equity futures have opened the new week lower this morning, with the S&P trading down about 0.5%, S&P futures that is. That was after US Treasury Secretary Scott Bessent said there are no guarantees that there won't be a recession. Attention now shifts to retail sales data, which is out later today, and also Thursday's FOMC meeting. Let's take a look at the charts of the S&P 500 and the Nasdaq to see where they are as we start the new week. Okay, so starting as always with the Nasdaq, you can see that the Nasdaq's fallen about 14% from its highs there on the 19th of February into last Thursday's low. At this point of time, I guess the base case is we are oversold and we are open to the idea of Friday's rally turning into a more substantial short covering rally, if you like. In terms of the upside levels I'd be looking for, well, there is some short-term support here, which comes from the broken uptrend, which was support, now resistance, coming from this December 2022 low, sitting around 10,671. That's your short-term support. Above there, you've got the 200-day moving average sitting at around 20,266. And then a little bit further, you've got this area of previous lows, 20,500. And the 50% retracement of this entire decline comes in around 20,700. So I guess it is possible that we could get up to this area here, but I think you're going to find some sellers initially operating in this area here and then here before we get to this 50% Fibo. Now, one thing I do want to say is that I do see any bounce, should it be forthcoming this week, as being a short covering rally. I don't see this correction as being the end. I think given the idea in terms of what we're seeing from US government policy is going to continue into year end, possibly, then I just can't see any catalyst for this correction to be the end point and the uptrend resume. So I see any bounce as being a short covering rally. Hence, we're looking for these levels where we could potentially look to set some shorts, looking for another retest of this low here. If this low is to break, you've got some support coming down here from September around 18,800. For the S&P 500, a similar story, except it happened in reverse. The uptrend support from the October 2023 low, slightly different starting point, but also was broken. It was broken first, and then the 200-day moving average was broken last week. It took us into correction, Tory, about 10% from this 61.47 high. Again, my base case is that we're seeing a short covering rally. If a rally does develop, I don't see it as being the end of a correction and the start of a new bull market, if you like. I see any rally as being a short covering rally unless the government policy, which we're currently seeing around trade and tariffs, were to change or shift dramatically. So we stay with the idea that any rally is a short covering rally. Potential upside targets for that would be the 200-day moving average coming in around 57.40. Above here, you've got the 50% Fibonacci retracement coming in around 58.32. And that also coincides with a lot of lows we saw previously into the end of 2024. You can see there's two here. And then over here, you've got some resistance coming in around 58.50. So I expect there to be some fairly heavy going if the S&P was to get into this area here. That's all from me. Thank you for listening and have a great week ahead.